Welcome back to XRP Update, where we break down the biggest developments in the XRP ecosystem and explain what they could mean for the future of digital finance. If you've been following the latest activity around the XRP Ledger, then today is a day you won't want to miss because we're looking at a development that many longtime supporters have been waiting for over the years. This isn't simply another technical adjustment or a routine network improvement. Instead, it represents a major step toward expanding the capabilities of the XRP Ledger beyond its already impressive reputation for fast and low-cost payments. More importantly, it opens the door to financial use cases that could attract institutions, developers, and investors who have been waiting for additional functionality before becoming more involved. As always, remember that our goal is to separate excitement from reality while exploring why these developments matter. So let's dive in and understand why so many people across the crypto industry are paying close attention to what's happening on the XRP Ledger right now. For years, one of the strongest advantages of the XRP Ledger has been its speed and efficiency. It can process transactions in just a few seconds while maintaining extremely low fees, making it one of the most practical blockchain networks for transferring value across borders. That alone has made it attractive for payment solutions and enterprise applications. However, the digital asset industry has evolved rapidly, and expectations have changed. Investors and institutions now look beyond simple transfers of value and want ecosystems capable of supporting a broader financial infrastructure. The conversation is no longer just about sending money from one wallet to another. It's about creating an environment where assets can be managed, utilized, and integrated into sophisticated financial activities. That is why the latest developments surrounding the XRP Ledger are generating so much discussion. They suggest that the network is continuing to evolve into a platform capable of supporting a much wider range of financial services than many people originally imagined. One of the most exciting aspects of this evolution is the possibility of bringing lending capabilities directly into the XRP Ledger ecosystem in a way that aligns with its design philosophy of efficiency and reliability. Think about how traditional banking works. Banks do far more than simply move money from one account to another. They hold deposits, provide loans, manage collateral, and facilitate countless financial relationships that drive economic activity every single day. If blockchain technology is going to become a meaningful part of the global financial system, the networks must gradually develop similar capabilities while maintaining the advantages of decentralization, speed, and transparency. That's why many analysts see this as more than just another feature. They see it as another building block in creating a complete digital financial infrastructure. Instead of being known only as a payment network, the XRP Ledger could increasingly become an ecosystem where value is stored, utilized, borrowed, and deployed in productive ways, expanding its potential utility far beyond simple transactions. Imagine a future where digital assets are no longer sitting idle inside wallets waiting for price appreciation. Instead, they become productive financial instruments that can participate in lending markets while still remaining part of a secure and efficient ecosystem. That possibility is one of the reasons this development has captured so much attention throughout the XRP community. Rather than viewing XRP solely as an asset to buy and hold, many people are beginning to imagine a future where it plays an active role in generating liquidity across the financial system. Institutions constantly look for ways to make capital more efficient, and digital assets that can support multiple financial functions become increasingly valuable from an infrastructure perspective. This doesn't mean overnight transformation, but it does indicate that the ecosystem is moving toward a more mature stage where utility extends beyond payments and into broader financial applications that could benefit businesses and individual users alike. Another important point to understand is that financial innovation often happens step by step rather than through one revolutionary event. Looking back at the history of the internet, email came before social media, online shopping expanded gradually, and cloud computing took years before becoming mainstream. Blockchain technology is following a similar path. Every meaningful upgrade adds another piece to a much larger puzzle. The XRP Ledger has already established itself as one of the fastest networks for transferring value, and now additional capabilities continue to strengthen its overall ecosystem. Developers build with greater confidence when infrastructure improves, while institutions pay closer attention when networks become more versatile. The result is a cycle where better technology attracts more participants, which encourages even more innovation. Whether someone is a developer, investor, or simply interested in financial technology, it's becoming increasingly clear that the conversation surrounding XRP is expanding beyond transaction speed and into the creation of a comprehensive digital financial environment. Institutional adoption has always been one of the biggest topics surrounding XRP because large financial organizations operate differently from individual investors. They require systems that are reliable, scalable, and capable of integrating with existing operational frameworks. Banks and financial firms don't simply move money. They manage risk, provide financing, maintain compliance, and support countless financial products for millions of customers. As blockchain technology matures, institutions will naturally evaluate which networks can accommodate those needs. The more practical services a network can support, the more attractive it may become for enterprise adoption. This is why many supporters believe ongoing development on the XRP Ledger matters far beyond the crypto community itself. They're looking at the possibility of infrastructure that can connect traditional finance with the digital economy, creating efficiencies that reduce costs and improve the speed of financial operations around the world. One fascinating aspect of the broader digital asset revolution is how quickly perceptions can change. There was a time when many people believed cryptocurrencies were useful only for speculation. Then blockchain began entering payments, supply chains, identity verification, and tokenization. Now discussions increasingly focus on complete financial ecosystems capable of supporting lending, asset management, and real-time settlement. The pace of innovation has accelerated dramatically over the past few years, and artificial intelligence is adding another layer to this transformation. AI systems are becoming better at analyzing data, evaluating risk, and automating financial decisions. Imagine combining that analytical capability with blockchain networks capable of transferring value almost instantly. The result could be financial systems that operate faster, more efficiently, and with less friction than anything we've experienced before. While that vision will take time to fully develop, today's advancements demonstrate that the foundation is steadily being built. When you step back and look at the bigger picture, the opportunity becomes even more interesting. The global financial system moves trillions of dollars every single day, yet much of the infrastructure supporting those transactions was designed decades ago. Many cross-border payments still involve multiple intermediaries, high fees, and unnecessary delays. This is exactly the type of problem that blockchain technology was created to solve. The XRP Ledger has already demonstrated that value can move across the world within seconds instead of days. But imagine combining that speed with additional financial capabilities that allow assets to become part of a much larger economic ecosystem. Instead of simply transferring money, networks could facilitate lending, liquidity management, collateralized financing, and other financial services in real time. That possibility explains why many experts believe blockchain adoption is still in its early stages, and that the most significant innovations may still be ahead of us. Another reason this evolution matters is because it could significantly increase participation from institutions that have been watching the digital asset industry from the sidelines. Large organizations rarely move first when dealing with emerging technologies. They prefer to observe, study regulations, evaluate risks, and then adopt solutions once they become mature enough for enterprise use. Throughout history, this pattern has repeated itself with the internet, cloud computing, and artificial intelligence. Blockchain technology is likely following the same path. As networks become more capable and regulatory frameworks become clearer, institutions may find themselves under increasing pressure to modernize their financial operations in order to remain competitive. That doesn't necessarily mean every institution will choose the same technology, but it does suggest that infrastructure offering efficiency, reliability, and practical functionality will receive increasing attention over time. One concept that many people overlook is the enormous economic potential created by financial inclusion. Around the world, millions of individuals and small businesses still face barriers to accessing basic financial services, such as affordable credit, savings products, or efficient payment systems. Digital technology has the potential to reduce those barriers by connecting people directly to financial infrastructure through the internet. Even small transactions, microloans, and low-cost cross-border payments can create meaningful economic opportunities when multiplied across millions of users. Instead of focusing only on high-value institutional transactions, the future digital economy could also empower individuals who have historically been underserved by traditional banking systems. If blockchain networks continue to improve and become easier to use, they may help create a financial environment where participation is broader, faster, and more accessible than ever before. That possibility is one of the reasons so many innovators remain optimistic about the long-term future of this technology. At the same time, it's important to stay realistic and understand that innovation does not guarantee immediate market results. Technology develops over years, adoption happens gradually, and markets often move in unpredictable ways influenced by economic conditions, regulations, investor sentiment, and global events. Exciting developments should therefore be viewed as indicators of progress rather than promises of instant price appreciation. Smart investors focus not only on short-term market fluctuations, but also on understanding how a network evolves and whether its real-world utility continues to expand. The XRP ecosystem has consistently attracted attention because of its focus on practical financial applications, and each meaningful advancement contributes to that broader narrative. Whether you're a longtime supporter or someone just beginning to learn about digital assets, one thing is becoming increasingly clear. The conversation surrounding XRP is no longer just about fast payments. It's about the possibility of participating in a new generation of digital finance that could reshape how value moves, how capital is utilized, and how the global economy operates in the years ahead. As the digital economy continues to evolve, those who take the time to understand the technology behind the headlines may be in a better position to recognize opportunities as they emerge. Markets will always experience volatility, and no investment comes with guarantees. But innovation tends to reward those who stay informed rather than those who react only to short-term price movements. The XRP Ledger continues to develop, new capabilities continue to be introduced, and the broader conversation around blockchain technology is becoming increasingly focused on real-world utility instead of speculation alone. The coming years could bring significant changes to the way people transfer value, access financial services, and interact with the global economy. Whether those changes happen faster or slower than expected, one thing is certain. The financial world is evolving, and it's worth paying close attention to the technologies helping shape that future. Thank you for watching XRP Update. If you enjoyed today's analysis and want more in-depth coverage of XRP, blockchain innovation, institutional adoption, and the future of digital finance, make sure to subscribe to the channel, turn on notifications, and share this video with others who are interested in staying ahead of the curve. Remember, everything discussed in this video is for educational and informational purposes only, and should not be considered financial or investment advice. Always do your own research before making any investment decisions. Until next time, stay informed, stay focused, and we'll see you in the next video.